I'm gonna go over a tape reading chart to set up a really nice move. I guess I'll start from back here on how price volume activity presented opportunities. So what you see is basically the market is consolidating, it pulls back and it tests this area, and then it forms a hinge. This right here is that apex or hinge. At that point, you have a lack of supply right there. You have about only 10 contracts traded in a hinge. Okay? 10 contracts traded in a hinge. So it's in a hinge, and you have only 10 contracts traded. Background seems to be bullish with a pullback. And at this point, you have a breakout right here where it says BO. Now, when it breaks out, what's interesting or what's relevant is this middle print. Now, that means you have about 1,300 contracts. And it took out the high of the hinge. Okay, so this is the high of the hinge. And it took it out with approximately 1,300 contracts. Okay, that's when you see a breakout, that's what you want to see. It has to be on volume because it doesn't make sense for it not to be on volume. Why? Because supply needs to be taken out. So if you're going to break out above a key level, any supply at that level needs to be taken out. So when you have a big print there, that means demand took out all the supply there. That's very important, meaning that level's been cleared. So that this breakout, you see the 1,300 print right here, 133 plus another 0 because this is in, I've divided this, so it's really 1,330. So 1,300 contracts traded, and it had follow through. So that's a high volume breakout. So that then after that, the price goes back down to test the breakout, and that's where a good opportunity comes in for a long position. After that, it goes sideways, and you see that there's low volume here, only 50 contracts traded. So only 50 contracts traded, and then what happened? Well, you have a breakout, you have a low volume pullback, and the market is ready to go up. Market goes up, and again you want to watch the volume on the breakout. How much do you have? 197. That's good, right? When you break out, 197 is very good. It's higher than the volume of here and here, so it's breaking out on high volume and has follow through. So now I'm watching this point column of X's and seeing where the highest volume is, and you see that it pulls back to that area because these guys are gonna buy. They're gonna buy that area because there's a lot of interest there. So they're holding that area, 71, 118, and then it dips below that area, and and volume dries up. Volume dries up to only 4. Okay. Shit. Let me see if maybe you can see it better now. So volume dries up to only 4. It broke out, has a high volume area, tested, comes back down, only 4. Which means what? Again, you have your low volume pullback after a breakout. You have a rally and a low volume pullback. This concept is 100 years old. now price moves sideways and then breaks out again. And again, you have your high volume pullback, this time on 213, right? 213. And it has only one brick of follow through. I like to see more than that, like more X's. So there's a breakout. There is one, it does go higher, but not that much. And then the warning sign, at least to me, is when it tries to break out again and only finds 10. What does that mean? That means they're not buying the breakout. That is your warning sign. Right? Because over here, the breakout, the heavy volume breakout with follow through, good follow through of at least 2 boxes. Then you have another high volume breakout on good follow through of 1, 2, 3, 4, 5 boxes. Then you have this breakout, which has one that I'm not really too crazy about that. But then over here, when it tries to take this area out, what happened? Volume dried up, which means they're not buying the breakouts. So now, it's a questionable game. And what happens is price starts pulling back. When price starts pulling back, it starts going sideways. And again, what I want to see the volume prints. And I'm noticing, again, that there's volume coming in on the supply side, 166 contracts. Then you have 112. By the way, when I say 112, it's really 1,120. So I just don't want to keep repeating the thousands and all that. It's easier. Anyway, so you have 112 goes up on 19. Right here, it's hinging. You have a hinge and you have a breakdown. So when it breaks down over here, I like it because it came in on good volume and half follow through. Right? So it hinges, breaks down, good volume, 128. Right? So it takes out the support area, 128. But remember that, this right here was a trend. This is not a trend yet. It's still testing prior areas, so that's why you have to be careful not to just say, oh, this high volume breakout, let me just short it. Have to pay attention to the background. Background shows breakout. It's a lot of strength, and this here shows corrective action. Okay, so you had this hinge. The force of demand died out basically over here. These two, they just completely died out, and force of supply increased. See that? Bingo. Force of supply increased with 128. So it went down, and what you want to be careful of is seeing what level did it get to. Is it a tested level? Is it untested level? It came to an untested level right at the demand zone right here. Alright, so that you can expect that, because traders will keep their orders at support. So when price goes down to this untested support area right here, right, it bounces. So even though supply came, it went to that support area, and then from that area you had some demand, and right here there was a lack of supply, right? So it went to the support area of the demand zone, this demand rally or whatever. It bounced, did a retest, had no supply. This lack of supply caused this move. Alright. Now the key here is again, you want to watch this area. So right now, this is where it got a little tricky, because it went to the prior high and it gave very good volume, 151, and then 132 as it came back into the area of the hinge. So this looks bullish, but understand that there's supply in the background. So you just, it's like they're giving multiple indications. This is a bearish indication. This is a bearish indication. But this looked like a bullish indication. that it's coming up on decent volume. But what happened was this happened. Supply dried up, and it dried up again. Okay, and what happened is when it went into this hinge area, sorry, not supply dried up, demand dried up. Demand was heavy, but then it dried up. So you see 151, 132, and then it just totally dries up. So right now, I'm still thinking, it did break out of over this area. It did have good volume. It had somewhat of a follow through, but I'm wary about this 5 and this retest where it's only 4. So I'm not really sure, because this is the area where supply came in. So I want to see that area taken out. It looked right here that demand was going to take it out, but that was not the case, and actually more supply presented itself and broke. So now supply is back in control. You want to watch how it broke. So it went below around 74. So that's decent. It's not a lot, but it's not that bad either. And when I take a look at the whole column, I see significantly high volume right here. So that is a good indication that that they're selling with strength. There's multiple ways to do this. One is to watch the prints. The second is to watch this histogram, and then you can combine them both. So basically it broke with this area having good volume. Now it starts moving sideways, so I'm anticipating a hinge here, and I do get the hinge. And what's very, very important is when you're getting that hinge, you basically also want to watch the volume. So you want to watch the level it's bouncing to, like right here, it's bouncing to that test of ice, I think they call it. Basically test the breakdown. Testing the breakdown, and when it goes into that test, what happens? This is when it was a no-brainer. Not a no-brainer, but the indications were more clear. Look at this lack of demand, and look at this supply coming in. So when it went up, it found a lack of demand here, right? Because what are you looking for? When supply expresses itself and then you have demand, you want to see low volume, right? You want to see demand die so supply can come back in and basically continue the move. So it goes down, and starts hinging, and demand is gone right there. Demand goes and supply presents itself. There's no coincidence that demand is gone and then supply, those strong traders come in and they short 1,200 contracts. So once that happens, it goes lower, right? And then it comes back, and again, only 20 contracts traded. So over here you have 10, over here you have 20. There's no demand here. So that just proves the case that 1 and then followed by the 2 just proves the case that demand is out of here. It's gone, which opens the door for supply. And supply smashes right through and tests like the high volume print right here. The 146. So it goes down, test, and this right here was you have to just be careful, because this right here was the upthrust where you had 170 contracts traded. That was the upthrust that they did. But I mean, it's actually anticipated, because they're going to test this in this breakdown area. So it will happen many times where you have, if you put your stops tight, there's going to be a big problem, because even though it looks like it's going, they purposely do the shakeout, and that's in the form of an upthrust. So if you have a tight stop that's right above the level, they're gonna get you. It has to be wider. So this is where the up thrust goes, and then it goes back down, and I don't really see that pressure. The selling pressure is like, I have no idea what the hell it is. Like, I'm looking at this and I don't see the selling pressure. Then again it starts hinging here. See this? It starts to hinge, and this right here renews my faith in that there's going to be a continued down move. Why? Lack of demand is going to cause an increase in supply, right? Lack of demand will cause an increase in supply. The low volume pullback will cause continuation. So at this point, when it does this right here, the 6, they break it. And I think I got out like right over here. Yeah. Why? Because these levels were important on the higher time frame. But this right here, the 6, basically was speaking to the trader, saying there's a lack of demand. When you see this breakout and you see it moving sideways and sideways, you want to look for, usually you want to look for a hinge as well as low volume. The low volume is a lack of supply, or LPSY, and on the bullish side it would be LPS. So that's the Wyckoff technique. But in just simple terms, you have supply, you have a lack of demand, you have continuation, and it goes down to this level here, right here. Now what happens? So when I saw this, I'm out of here, like right here. And I liked this because it was 82. So 82 is not bad. Like when it broke not on low volume but on 82 volume. So it's 820 contracts traded here to break this. And then over here, this volume, you can't see this, that you can't anticipate this, but unless you're watching levels. So on the higher time frame, it was very obvious, like you gotta watch your ass when you're over here, because if I show you on the higher time frame, what happened was this was a low volume area, and you see this, and it's in a spring position. This is where you want to be careful, because there's a rally, there's a pullback, and it went into spring position, and I don't want to mess with that, because when it went here, it was in that spring position. So you better just get out, because they're going to come in and try to do all types of shit. So after this breakout, what do you see? You see that the pressure comes in, and again, when it breaks out, you have where's my boxes? You have, what's that? Huh? You have what? High volume. So when it reverses and it breaks out above these highs here, does it do it on 10 volume? No, it does it on 110, which is really 1100 contracts to break and follow through. And only 0 traded down here. So right now, I believe that the bulls are back in control. Anyway, that's the review of applying Wyckoff concepts on the point and figure chart. But this is no ordinary point and figure chart. That's a point and figure chart. Alright? Now, it's not a point and figure chart. It's more than that, because you have the volume prints. Alright, bye.